Hello and welcome to Virtual Investor Conferences. On behalf of OTC Markets, we're very pleased you joined us for our AI and Technology Conference. Our next live presentation is from BioLargo. Please note, you can submit questions for the presenter in the box to the left of the slides. You can also view a company's availability for one-on-one meetings by clicking Book a Meeting in the top toolbar. At this point, I'm very pleased to welcome our next presenter. He's Dennis Calvert, President and Chief Executive Officer of BioLargo, which trades on the OTCQX Best Market under the symbol BLGO. Welcome, Dennis.
John, thank you. So good to be here and connect with everyone. We appreciate it. All right, everybody, we've got quite a bit to cover and a very exciting story. At BioLargo, we've been innovating for almost over 15 years with a heavy emphasis on science and engineering, helping solve some of the greatest problems that face people on the planet for environmental impact, right? And we've created an innovation engine for a better tomorrow. And we're going to describe that in great detail. I want to remind everybody to look at the K's and the Q's, certainly for the risk factors. We've been overcoming risk factors and barriers to entry for, like I said, over 15 years. We know them well. They're very important. Be sure and look at that. We will be talking about forward-looking statements, and we'll rely on the safe harbor for that. But we also want to try and give you some discernment as well, so you can be knowledgeable about our status and where we believe we're headed. We've got a bunch of science and engineers and innovators focused on sustainability and human health, driven by purpose. It's the foundation of the company. Make life better, high impact. We focus on doing what we think has a chance to be transformative technology in markets around the world. We focus only on best-in-class solutions, best in class. If we think it's incremental, we're probably not going to invest. So we have a mindset as an investor: precious capital, precious time, precious resources. Put our money where we're going to make the biggest impact for not only our stakeholders, but for the world in general. And like I said, sustainability and human health. Focus on problems that don't have a good answer. A couple examples: we have infection control. It's a tough market. We've got an answer that's unprecedented in its performance. Same thing for PFAS. We do something that no one's ever done before. The way we commercialize, we invent, proven, partner. So the idea is we've got an innovation engine. Get it seated in the market, prove it up, find the market, find the channel, develop a business model that makes economic sense for our stakeholders and for the marketplace, and then partner to leverage those technologies for highest impact possible and rapid growth. Heavy reliance upon science and engineering and intellectual property. One of the key features is the parent company, of course, BioLargo. We have 4 operating units. They operate as subsidiaries. Why subsidiaries? Well, it allows us to bring in direct investment. Clyra is the best example. We've raised almost $20 million in Clyra. BioLargo still owns about 52%, just to give you an example. And we have a royalty, a license fee for the intellectual property that's licensed there. But by doing that, it allows us to invest into specific talent, resources, and direction for these various subsidiaries. O&M Environmental is our most successful company thus far. It's paying a lot of the bills. We've got a great success story. We'll talk about that. The engineering, BioLargo Equipment, Solutions, and Technologies, BEST, is focused on water treatment and PFAS remediation. And then our environmental BioLargo Energy Technologies is focused on the cutting edge of battery storage as an alternative to lithium. We also have an R&D facility in Canada. We have a team of about 45 employees, plus a series of long-term consultants that are really specialists in the field. So we've got some critical mass, and it allows us to really do things that companies only dream of doing, especially at this stage of our development. One of the key attributes of our company is the underlying value. We call it the unseen value, because often at this stage, companies get valued on their revenue and their earnings, understandably so. But as a result of making such significant investments in these emerging technologies, it's important to consider the company as a portfolio with underlying assets that may or may not be seen. It takes a deeper dive. The cornerstone of the company is these 4 bullets on the left: unmatched technologies. And make no doubt about it, the claims we make we believe that these technologies have a chance to be transformative in the various markets that they serve, and they are unmatched. In some cases, we believe they are number 1 in the market and have a chance to really take that market. Capital conserving strategy. That's That's an event-proven partner. We'll talk specifically about that when we get to some detail. Super highly qualified people, science and engineering, 10 or more PhDs, 27 engineers. Rhetorically, we can do just about anything. Not literally, but rhetorically. We have extraordinarily high caliber people that serve at the hub that support all these various endeavors. Each of the companies has its own CEO. It's very important. Think of us like a portfolio, almost venture stage, investing in venture stage development for high impact. And that's that fourth bullet, high impact. The underlying portfolio has inherent value. So when someone takes a look at the company, you need to think about the exits. These are designed to incubate, commercialize, partner, grow rapidly, experience the fruit of that investment, and then ultimately exit. They can exit through a whole series of different alternatives: IPO, sale, joint venture, partnership, ultimately the sale of the technology, sale of the company. The menu is endless, and it's very important because we're building value. We're investing in these technologies to make an impact for greatness. We've had an incredible run, over 600% since 2021 relative growth on the top line. We came in this last year. We just issued our annual report and had our earnings call, I believe it was yesterday, at about 17.8 million in revenue. One of our operating units generated over 5 million in free cash flow. Just think about that. One of the assets that's experiencing rapid growth has generated sufficient cash for us to continue the R&D components for the other as we position them for adoption in the marketplace. We do believe the growth will continue. Some of it's hard to forecast, right? But we have significant fruit that's bearing out from investing for such a long period of time. And so we're going to share that with you, like PFAS and like our medical assets. Our net shareholder equities is growing. We're at 6 million. As of the end of the year, we had about 3.6 million, 3.5 million in cash, almost no debt, a little bit of equipment finance that's tied to the infrastructure that we're building up for medical. We're just at that break even on the cash flow basis. We do show a net loss, but 80% of that net loss is non-cash. So that's balance sheet treatments, right? Non-cash charges to earnings. And what's remarkable about those stats is that we've been able to continue to increase our stockholder equity while we're making venture stage investments in assets that we believe have extraordinary growth potential in the future. And the ability to do that is pretty remarkable. And we've sustained ourselves for an extraordinary long period of time to now witness the adoption and the commercialization of these technologies come to bear. That adoption cycle is where most companies fail. We have not. In fact, we look at these assets and we say these technologies have a role to play throughout the world. We believe they're number one in their class, and it's only a matter of time until we find adoption. One of the greatest success stories thus far, generating the most cash, is the product Poof. Poof, P-O-O-P-H. This is Poof. If you haven't seen it, look it up. Poof.com, P-O-O-P-H, P-O-O-P-H. There's 8 unique products. It's finding adoption. It's currently being retailed in about 30 to 40,000 stores, somewhere in there. And we believe it will continue to experience growth. They had a record year this last year. Now this is really important. The nature of this partnership, they're major retailers throughout the market, and it's one of the fastest growing products in the pet space. And here's our business deal. This is important. We invented these products. We went industrial. We found commercial adoption. We suffered. We paid a dear price to understand the nuances of making product and high performance. And its exceptional claim is that it eliminates odor. It eliminates odor through oxidation, and it does so gently and so safely that it's non-staining and non-toxic. Non-staining, non-toxic oxidation. That means that molecule for molecule, when the chemistry comes across an organic molecule, it's going to dismantle it. It's going to break it down, right? Break it down. It's chemistry in a safe way that does no harm to the animal, does no harm to people or the planet. Okay, that's remarkable, which means odor elimination is the key claim, gentle and safe. Got to go watch the infomercial. It's remarkable. This product line has gone from zero over 3.5 years ago to a run rate top line for our partner at approximately $45-50 million, something like that. We're the supply chain. So in the bargain, we said, look, we can manufacture these products. We can continue to build out the product line. We'll take a little money on the margin of manufacturing. We'll take a little royalty for sales. And in exchange for exclusivity, we bargain for 20% of the brand. Why is that important? Well, it means that we're making money. We're recouping our investment. We probably invested about $10 million over about 8 years in aggregate. And now we're monetizing that through a partnership where an incredible branding company developed by Ikigai Marketing Works created the Poof brand, and they're blowing it out all over the world. Okay, so what does that mean? We're building the equity in their brand. When that brand will sell, we'll participate in 20%. That's our deal. This is a great way to monetize technology. If you think about it, it's three-pronged. It's supply chain, which we're expert at. It's a little royalty, which is IP, and then exclusivity for brand. That's a winning combination. This is a big deal for our company, okay? Record year for them. 4 basic categories: sprays, wipes, literizer, that's powders, and potty pads, like a puppy pad, okay? And we're working on more products. And the key feature here is the product. People love the product. It really does work. The next on the now remember portfolio, right? So remember portfolio. The next is Clear Medical. Clear Medical, we've invested total investment is almost $20 million. $20 million, 13 years of work. It's incredible. And so we've identified a partner for distribution that's a global giant. It's really exciting. We've now worked well over 2 years to get through the scale up of manufacturing. We developed a partnership with Keystone Industries out of New Jersey. This last year, total invested capital is about $3.7 million. That's a significant investment for us, investing in staff, expertise, and equipment to be able to produce to scale. Our partner said, we'll do this with you if you can assure us that you're prepared to produce about 1 million units a year times two SKUs, 2 product lines. Okay, major turning point year. We've now just concluded a review of our manufacturing capability to meet that mark, and we're in the final stages of preparation for launch. We're very excited about this. This technology is an origin story for the company. And again, 13 years of investing, FDA cleared, product ready to go to market, incredible testimonies from what's called key opinion leaders. And it's a transformative technology for infection control and wound care. Different markets. Infection control is this idea of helping prevent infection in a surgical suite and open procedures. It has incredible claims: broad spectrum, safe, gentle, extended activity, up to 3 days, proven antimicrobial activity in a closed environment, and some evidence that's significant for biofilm control. When you put all those claims together, all those claims, right? Safety, profile, broad spectrum, no acquired resistance, non-staining, non-toxic, no sensitivity, no systemic toxicity, and yet still effective, it makes it number 1 in the world. It's just really important that we just drive that home. It's number 1. And we've proven that technically, and now it's time to prove it commercially. And how do you do that? Well, we think you do that with big partners that want to go big so that we have a chance to really take the market and transform it. So this is very exciting. I was just in Barcelona last week for the European EWMA, European Wound Management Association. Clinicians, I got to watch on the front line as clinicians come to the booth, ask the right questions, look at the profile, and to a T, we hear, I needed it yesterday. I've got patients that need this care. Okay, awesome. Big markets, big deal. Again, remember we talked about the monetizing strategy. We invent proven partners. So in this case, we got a global giant. Now we touch many different markets. Some of these we might go vertical ourselves. We might find some additional partners. One of the theories is that once we get this first one launched, we'll have these others lined up for commercialization through partnership pretty rapidly. Okay, we think so. But either way, the product has a chance to make an impact in all these various markets. They're huge. And we think the way to punch through with some muscle is to leverage the partnerships that we've created, both on the contract manufacturing side and the distribution side. So just think about that. We're a virtual manufacturer. We don't invest in factories. We invest in product for an impact. We find partners who want to go out and make money with us and do something great. We find manufacturing that can leverage their investment in infrastructure. It's a great business model. There's 2 more in the portfolio. I'm not going to be able to cover them all, but I want to give you a glimpse. Salinity is a long duration energy storage technology focused on cell technology. It's an alternative to lithium. Okay, it's the youngest in the portfolio. I mean, we haven't had that many years of work, but it's incredible. It's safer, more sustainable, more durable, and more efficient especially when you compare it for long duration energy storage. There's also some other features that make it special. Now look, long duration energy storage is pegged. This is an article that's a couple of months old. Clean energy's next $1 trillion business. $1 trillion business, long duration energy storage. Driven by who? Big data, AI, renewable energy, the energy transition, okay? No matter what the source of energy, long duration energy storage, that's the ability to store energy and draw from storage over a long period of time to both balance the grid, leverage intermittency with renewable energy, right? Deal with peak demands, and monetize by arbitraging the cost of energy and the delivery of energy, right? That arbitrage is available. It's only available with storage. The demand for storage is insatiable, okay? So that led us to a theory. The other is safety. I got to tell you, though, on the international scene, the global supply chain and geopolitical risk of lithium is by far the most important motivator. People are looking for an alternative, okay? We hear about lithium fires all the time. We can't cover all this detail. I published it so that people can have access to it as a basic summary, the summary that they can look to later. But the punchline is, we have a bunch of features about this battery tech that make it special. Now, before we acquired this technology, there was 8 years of R&D. We've invested just a few $1 million and we have commercial prototypes. And we made a decision along the way. Here's the key claim. Its energy density is extraordinary. It's 2.9 times the energy density of lithium. Energy density is a technical term for punch for the mass, okay? High voltage, 95% round trip efficiency. Lithium has a problem. It goes to 80%, 20%. If you overcharge, it builds up dendrites. That's internal degradation. We have no internal degradation, okay? Earth abundant materials, no runaway fire risk, none of this runaway fire where one cell lights up another. This is data that's really super techy, but bottom line is we've got 3 reactions in one. We achieve this extraordinary performance as we increase voltage, and we've got consistency in the output, and we're now at the point of doing third-party validation, which we're going to talk about. This is the basic put up. These are competitor products. So we're focused really on that grid scale, trailer sized units, which we think is so just imagine you see a big solar farm, the batteries that go with that are typically 1-to-1 or 2-for-1. And so, 500 megawatt storage, solar field needs 500 megawatt storage of battery storage. That's about $200 million worth of batteries. This is big industry, right? And every data center, the big data hogs, the energy hogs of the market right now, they need lots of storage, okay? It's insatiable. Bunch of different markets, we covered that. It can play a role. And here's where we're at. We're currently at about a $43 million valuation. It's pretty conservative. We think very low, but we built a business model and we made a decision that says, don't sell batteries, sell battery factories. Don't sell batteries, sell battery factories. It's essentially like a franchise model. Got a bunch of people that want to franchise with us, which is awesome. And we're getting through this proof of claim and scale up of the design. And so we're kind of right in that zone where we're emerging from de-risking the technology. That's really where we're at. We got to de-risk the technology, make sure people are comfortable that we can execute. The last is PFAS, and I want to go really quick but this is exciting. That's per and polyfluoral alkyl. That's the chemistry that's associated with nonstick coatings. And just put it in an internet search, PFAS. Linked to birth defects and cancer, considered one of the most significant environmental challenges in the world today. Estimated to be about a $17 trillion market for all implication. There's a bunch of different sides of this industry. One is the inputs, the other is the cleanup. We're focused on the cleanup. And here's the punchline. We've discovered a way to migrate PFAS in a flow of water so that we could super concentrate and isolate the PFAS so that we remove only the PFAS. And so when we treat a body of water, we pull out about 2 pounds of concentrate. And when the competition, which is typically incumbent technologies like ion exchange and carbon, they produce about 40,000 times more by weight of waste stream. Now catch that. That's 1 to 20 to 40,000 times. Okay, and the discovery really is if you can super concentrate and isolate, then you can also destroy efficiently. So we have we just did a case study, which I'll show you, and we're working on publication, but where we demonstrated ability to cut the cost over time, the total life cycle cost by 90%. Also, this technology led to an invitation on our company and me on behalf of the company as a member of an Environmental Technology Trade Advisory Committee to the Secretary of Commerce. It's a great place for us. You know, we have special knowledge about PFAS as an innovator breaking through the barriers to entry, and we know PFAS like nobody. Regulatory, enforcement, the policy agenda. And so it's a really unique chance for our company and for me to be part of having a chance to impact policy on one of the most significant environmental challenges that, again, to face our planet. It took 50 years to get there. It's going to take 50 years to get out. Mark my words, 50 years to get there, 50 years to get out. Anyway, we've had significant trial success. We have a stellar group of people running this company. Tanya, of course, is an expert. We've got Sally Gutierrez, the head of R&D for the United States EPA, 22 over 30-year career. Head of R&D for the United States EPA. Make sure you got that. Jeff Keitlinger, executive director of the Metropolitan Water District, the largest single mover of water in the world. So make sure you get, again, perspective. And Larry's a huge influencer in Orange County, active in the water industry. Randy, 30-year engineer, has been all over the world, worked for global multinationals most of his career, and now is the head of our engineering group. And then Tanya, 25 years in the water business. This is an extraordinary team who understands the big macro view, the supply chain, the policy, the technical, and as a result, we're winning when other people fail. And there's that cost comparison real quick. Again, you'll be able to go back to it. I'm not going to go through all the detail, but you'll be able to go back to it and look at the references. And it's extraordinary. It's extraordinary that we can remove on a life cycle cost, this maintenance, the destruction, the transport, the handling of the waste stream is an extraordinary expense for the incumbent technologies. And what they end up doing is moving the waste stream from one place to another. And we want to break that cycle. We want to say, look, don't move waste streams from one place to another. Don't put it in the landfill. Make sure it's broken down so it doesn't continue to do harm or potential threat. Our first commercial install was secured some time ago, and then the winter set in, a little delays on permitting, but we're about to install in New Jersey. We're doing a lot of teaming agreements with engineers on a regional and global basis, some of the biggest players in the market. It's very exciting, and essentially in that role, we team with an engineer who sells us into the marketplace to solve a specific problem for a client. It's awesome. And so this is not fast. It's an extraordinary amount of work, and we earn our money. But what I can say is that we do believe we're number one in the ability to concentrate and destroy. Some of our testing has shown non-detect status. That means we can take out the PFAS to a level at which it cannot be detected. It's a remarkable claim. Again, you're not going to find those claims in the market. They are extraordinary claims. And so, of course, the journey is credibility and proof. Prove it, prove it, prove it, and don't screw it up. Stay the course. As we say, it takes a decade to get the credibility and a minute to lose it. So we're very careful and precise in this business plan. And then leachate. Here's the thing about PFAS. There's so many sub-markets. People think drinking water. It's actually all water. It's groundwater. It's industrial water. It's municipal wastewater, industrial wastewater. Leachate, the water that comes out of the bottom of the landfill. We have some extraordinary claims that have just broken through and some new patents in process and all that. So we're very active, and that diversity for our technology to serve all these different markets allows us to become a tool in the toolkit for our channel partners to go out and solve the problem. Okay, to close it up, Dennis Calvert, DC@BioLargo, that's my email. You can you're welcome to reach out. And so, Alex, I'm going to ask you to kind of step in and focus on questions, and we have about 6.5 minutes.
Yeah, you bet, Dennis. Okay, first question for you today is a person who asks, are you producing your products, for instance, Poof and Clera, yourselves? And if so, where are your production facilities?
That's a great question. So remember there's 8 SKUs there. So on the liquid chemistry, we do produce concentrates, and then we ship concentrates to what's called a co-packer. Co-packer is basically a bottling company, right? And so it's a hybrid. In the dry materials, we require raw ingredients. We do blending on site. That's in Westminster, California. And we can ship those concentrates all over the world to be incorporated in other products, another quality control, and also protection of our intellectual property. And in that case, we use also a co-packer or a co-producer that produces these fabrics and cover stocks and the things in the absorbent material. So it's a little bit of a hybrid, but functionally, we primarily rely on co-packers to produce those products to our spec. We have so much experience that we're really good at that QA/QC. So I hope that answers it.
Awesome. On the topic of IP, can you speak to, I mean, obviously BioLargo's business kind of runs off of IP, right? Can you speak to the IP portfolio of BioLargo, like what IP protections there are to kind of keep this business safe?
Yeah, sure. We've got quite a bit, actually. We do focus on patents, and the patent game is so interesting. We're really good at it, and we like to wait until we find commercial tracks as best as possible so we get as much time as possible. And if we see people heading in our direction for some reason, we're such an out-of-the-box thinker that in most of the technologies, we don't see a lot of direct threat from a technology perspective. They're so novel. And we've made these discoveries and then done the work to enhance our position. But we have a whole portfolio of patents that cover all the things that we're talking about at some level, and we're always seeking to expand it. So we're nurturing the idea of building a robust IP portfolio. And again, as I said, we have patents in all the areas in which we're practicing the art.
Awesome. So just moving back to the battery for a moment, obviously you touched on this, but can you kind of explain kind of what the timeline might be on the commercialization of the battery technology, kind of where we're at in the journey of that?
Yeah. Well, so remember the business idea is sell factories, don't sell batteries. Don't sell batteries, sell battery factories. Well, in the next month or so, we're focused on third-party validation of the technical claims that we're making. We know them to be true. We believe they're true. We've done the work. We're expert in that space in terms of the testing and the expertise to understand it. But we need third-party validation, so that's next. With that in hand, we've got expression of interest from a whole bunch of people that want to get in the battery manufacturing business. So just think about that for a minute. Who wants to be in the battery manufacturing business? Well, countries do. Economic development groups do. Entrepreneurs do. Renewable energy people, big data people that need a lot of batteries, or people that want to employ 1,000 people and create net export dollars. There's a lot of different reasons you might be in the battery business. But our thesis is to put them in the business and get paid to do it and participate in the economic stream that we create. The thesis is simple. We're giving more than we're taking. We're giving more than we're taking. We're offering people an opportunity in a market that's the next $1 trillion business, as we talked about with the Economist magazine, and also that enables functionally the creation of microgrid development. And so when you think that way, right? So commercialization of the battery tech starts with a partner who wants to build a factory, because we generate revenue and income the day we start. So in theory, that could happen in months, a year, right? That sort of time frame. Once we build a factory, the building of a factory probably takes 1.5 years to 2 years minimum. Okay, so the batteries are probably at least 2 years away from being in the marketplace in mass, at least 2 years. But our commercial track starts when we find the partner that wants to fund it. And so there's a lot of people already expressing interest, and basically they're saying, prove to me that battery works, and we're really interested in moving forward. So there's a lot of business development going on there. It's very exciting. We're not forecasting yet, but we know it's big. And our business model under that scheme, that plan, creates a net present value on 10 factories of about $1.5 billion. Just so you know, $1.5 billion on that plan. That doesn't mean there's not risk. There is risk. You got to execute. But that net present value on 10 factories at 1.5 billion. Imagine 100 factories. Can you franchise 100 factories? You betcha. The demand is so great and the supply so limited, and everyone wants an alternative, especially with the geopolitical risk associated with lithium in China.
Awesome. Okay, we got one question left, and we have about a minute left. So just to kind of cap us off, BioLargo obviously has a lot of opportunities in the near, medium, and long term. What do you think are the kind of key milestones or kind of moments that you expect in 2025?
Well, there's a bunch, right? So what we believe will happen is POOF will continue to grow at some level. Hard to forecast, but we believe that's true. So we're confident in that opportunity. The second is we'll get our partnership squared away to launch product in the medical field, and that'll take a little bit of startup time, but when it goes, it's really big. It's really big. And so that's a near-term milestone that we're seeking to achieve now, as soon as possible. PFAS, we're going to get some wins. We're not going to get 100 wins, but we're going to get some wins. Now, remember the projects there, they can be, 750 to $1 million, all the way up to $8 to $10 million. These are significant projects, and we're in it to win it with some of the leading partners in the field. I think it's going to be great for us. So get some wins, right? Get some wins. Battery, do the third-party validation, properly capitalize that venture. Right now, BioLargo is the funder. We want to get that into a self-funding mode so that BioLargo is a partner funding a project that has a chance to be worth billions of dollars. Okay? And that's direct investment. So we'd like to achieve that milestone and then get through the securing of our first partner. The reality is any of them are so significant that we believe that the incremental value will be substantial to the underlying equity of our company. We're currently valued at about an $80 million market cap. And when you stack up all these assets and the fact that we've invested so much and so long and really de-risk them in so many ways, not perfectly, but so many ways, we think our fundamental value is really low. So it's a great time to do a deep dive on a very technical company that's paid the price to be an emerging company. So there you go. Hope that answers the question.
Awesome. I think it does.
All right. Yes, everybody. Thank you for your time. Be sure to reach out, do a deep dive, and appreciate you very much. Take care.